Hello friends, welcome back to our tax segment. So in the last video we talked a little bit about why you should be very careful before setting up your C-corp. There might be other alternatives, but obviously a lot of you guys are either working on 1099 or have small business. Maybe you own a gas station, or maybe you have a medical practice or insurance company, real estate business. A lot of small businesses that are operating just as it is. Basically, maybe you register with your local city and start doing some business, which is fine, but there are a lot of advantages of incorporations. So I want to talk to Sanjeev ji a little bit about that. See, if somebody has a small business, somebody's thinking about setting up let's say a postal office or an insurance business or real estate, what do you recommend? What should they do?
Well, that's a very good question. We have to look at the totality of the situation. Like, for example, if the person wants to start a postal office, a UPS store or a FedEx store, definitely FedEx stores have a lot of equipment and definitely a lot of paperwork, a lot of papers, document and all the stuff. So I would suggest them as corporation as compared to LLCs. The reason for that is as corporation are much better in terms of deductions of expenses, like deduction for regular expenses like papers and everything. As compared to LLC, LLC is much better for holding real estate rather than operating a business. So as corporation is a way to go for business like this one, like UPS stores, or if you want to start a gas station. Now, gas station has bigger liability because there are environmental issues and all this stuff comes in. So I will suggest an LLC. When there's a big liability, definitely LLC is much better. Now, regarding in the new Tax Reform Act, the Tax Cut and Jobs Act, one has to be really careful. If you're running a business, whether it really makes sense to operate as a sole proprietor on a 1099 or convert to S corporation LLCs, because you get 20% of the income coming from that business as tax, as you don't pay any taxes, because that's a deduction. Now,
so Sanjeev ji, when you say S-corp, has also changed?
No, nothing has changed. Nothing has changed. What has been created in the tax reform is we need a couple of definitions like qualified business, qualified income, qualified business income, and then taxable income limit. Now, first is qualified business income. So if you are any kind of business, and you have a net profit, and your business income is less than $315,000. So you don't have to pay any tax on the 20% of that income. It's tax free up to 20% of that income up to a level of 315,000 taxable income. If it exceeds 315,000, then we have to look at it what type of business you are in. If you are a doctor, doctors, lawyers, accountants, then they are losers because they don't get that 20% limit.
And by the way, this deduction, is that valid for any business or only your corporations?
It's valid for any business.
Okay.
But they have specified that if you're a doctor, you're a CPA, or you're attorneys, if you have income more than $315,000, you definitely can't take that 20% deduction. But other businesses, other owners can take that 20% deduction. Now, there's a computation. Like I said, you have to have a qualified business, qualified income limit, and then taxable limit. So you have to see all those three scenarios where it works to the best of your interest. Now, if your income is too high, let's say you're making more than $600K or $500K or $1 million, and you're running as a sole proprietor, it definitely makes sense to convert that sole proprietor to S corporation, because the higher if you're paying W-2 to yourself or paying W-2 to your employees, you can get that 20% the deduction. In case of sole proprietors, you don't get that deduction, but in case of S corporation, you get that deduction, plus you save on self-employment taxes. So definitely it makes sense in that case. If you're running a business as a sole proprietor, it definitely makes sense to convert to S corporation if your income is higher than $500,000 or plus. But if you're a doctor or an accountant, you definitely, if your income level is above $315,000, then you can't take that deduction. So there are certain ways you can, even doctor or CPA can take advantage by buying equipments and trying to lower that taxable limit.
Right.
Beyond, they don't want to get beyond 315,000. So you have to do calculation in that sense. So
I think for the most part, sounds like S corporation is the way to go.
Most part, yes.
Right.
Most part, yes. But again, till 315,000, it can be sole proprietor, it can be S-corp, it can be LLC.
But S-corp doesn't get to take that 20%, right?
S-corp can take that 20%, yes, depending upon the payroll. How much of payroll you're running for yourself versus, and what type of business you are in. If you are a doctor or a CPA, and you do S corporation, definitely you can't take that 20% deduction, because they have specified that those types of business cannot take 20% deduction if the income from the S corporation exceeds $315,000.
So let's say all the medical practitioners or dentists or chiropractors, I guess all of those people fall.
All of those people. Right? So for them, we have to plan in such a way that their income does not exceed $315,000, because there are other ways you can lower their taxable income by buying more equipments, because they are allowing up to $2 million worth of purchase tax. They can take write-off up to $1 million, 100% of that. So they can lower your taxable limit. Taxable income, so that you can qualify for that 20% tax-free deduction.
Yeah, so I know some of you guys might be getting lost there, like, if I earn, let's say $1 million, how do I reduce it, right?
Right.
how do I change it from 1 million to 300,000? Well, believe me or not, that's why you go to a professional, because they can advise you. It's just a matter of debits and credits. How do you move the funds around?
Yes, so to summarize is, if you make more money, you can save more taxes.
Correct.
If you make less money, you end up paying more taxes. The reason is the planning comes into picture. How to plan your stuff in a way you can take the deduction to the maximum level and pay less taxes.
I think that's why we hear that saying, right? Rich people only get richer, poor people only get poor.
And remember, President Trump's signature is all over the place.
Right. Yeah, so maybe he's trying to compete with the richest guy in the world or something. But anyhow, it's working out in at least business community is very happy.
Oh,
right?
Definitely. If you, again, it's all about creative planning. If you do the planning in the right way, you will save more taxes. If you don't, unfortunately, we'll end up paying more taxes.
Yeah. So in the next segment of the video, I want to talk to Sanjeevji a little bit about people who are maybe consultants, because we have a lot of those here in the Bay Area, and how they should manage their taxes this year. So definitely watch out the next segment. We have a webinar coming up where you can obviously ask Sanjeevji your questions. So I would strongly recommend that you guys register for that ASAP. That way you can actually, there are always some things, we're not covering everything in detail. You can talk about some of the things, not too specific, but we'll try to cover as much as we can during the webinars. So thank you very much, guys. We'll look forward to seeing you in our next segment. Bye-bye.